Welcome to the Bulletproof Cashflow podcast, the go-to place to gain financial freedom through real estate investing. Here we interview investors, mentors, and entrepreneurs who share their secrets and advice to help you build passive income. Let's get into the show.
Hey everyone, this is Agostino. When we talk about building a legacy and building generational wealth, a consideration to the formula is legally keeping as much money that you're earning from Uncle Sam, okay? And truth be told, the reason why most people get into real estate is because there's so many tools that allow you to do just that. Well, today's guest is very familiar with how to apply the strategies needed and has helped thousands of investors and clients save and protect millions of dollars in wealth. He has done tax planning for multinational investment companies and has helped individuals and has counseled clients on numerous real estate transactions. Now, as an attorney and certified exchange specialist for Madison 1031, he helps use the power of 1031 exchanges to build generational wealth. So with all that, I'd like to welcome Mike Brady to the show. Hey, Mike, thanks for coming on, man.
Yeah, thanks for having me on. I really appreciate it.
Yeah, it's going to be awesome. So if you like what Mike has to say, you can send him an email to alex@madison1031.com. And if you like our content, please don't forget to leave a comment and rate the show. Finally, if you text the word freedom to 202-410-4202, you can receive our free ebook, The Bulletproof Guide to Finding a Broker. Okay, Mike, go ahead and tell the listeners about how you got your start with this whole 1031 thing.
Yeah, it's interesting. So, I'm an attorney, as you said. I've been practicing law for about 26 years. I started off with a small firm on Long Island in New York, in a general practice, handling real estate matters for them. And the first project I ever worked on, the partner I was working with said, "Mike, we have this great project. It's a 1031 exchange." I said, "Great, what's that?" He said, "I don't know, go hit the books and figure out what it is. It has something to do with taxes and real estate." And ultimately what I discovered was, when I cracked open Section 1031, was that it was as clear as mud, and I actually needed some help. And after many billable hours that we couldn't charge the clients, I discovered I needed to find a good qualified intermediary to walk me through the process. And so I did a number of exchanges on behalf of clients over the years. That client exchanged from a 5-family building in Queens, New York, and bought a building lot in the Hamptons on the east end of Long Island, which is a pretty profitable transaction for him. And I got involved as qualified intermediary in 2005, running the East Coast Division for Asset Preservation, which is Stewart and Title Insurance Company's QI. And I joined Madison about 2 years ago, handling structuring transactions and sales and marketing for them.
Nice, good. So for those people that don't know what a 1031 exchange is, can you explain what are some of the benefits of 1031 and how does one apply it today? Like say they have a small deal, they have a 20-unit property. How can they use 1031 to help protect the gains that they got from that property?
Right. Well, it's important to note that when you sell appreciated property of any type, but particularly real estate, the profit is taxed by various levels of government. You have the federal government, you have the states, and in some cases you have cities that will tax you as well. And what that means is that from your profit, you can expect to pay typically up to about a third of your profit in taxes. Okay, so what a 1031 exchange allows you to do is defer those taxes by reinvesting in other property. If you reinvest in another property and you go through the process, which we can get into a little bit, you defer the taxes, which leaves you with more money to go buy bigger and hopefully more profitable properties. It's kind of like taking a term-free, interest-free loan for various levels of government from deferred taxes and buying, better property. And that's what's very helpful. So you might have somebody who's selling, like you said, a 10-unit apartment building, let's say, and it's appreciated over the years. Well, then they could take their entire gain. Let's say they could buy a 20-unit building. Now it's, 10 more doors that they can rent. That allows them to put more money in their pocket and using basically the government's money to do so.
Nice. So let's do a real world example then. So let's say, for instance, there's a $500,000 property, you paid $500,000 for it. 3 years later, it's appreciated now. It's maybe worth $700K, and you sold it. You sell it for $700,000. There's that gain, and
right.
I want to try to avoid it. I don't really need the money right now because I've already made it through other passive income, so I don't need to have that cash. How do you specifically protect that money? Like I found so I have to find another deal.
Right.
So how does that work then?
Yeah. So then what you would do, you would have to find another property worth, about $700,000 or more. Okay.
Okay.
And then you buy that property through the 1031 exchange. You need a qualified intermediary in the middle, which we'll get into, but I mean, that's important to note. You have to, set this up with a qualified intermediary, such as our company. When you close on your sale, the net proceeds will come to us. You then have 45 days to find your new deal and identify it with us in writing, and up to 180 days from the closing to actually close on that new deal. Okay, so then you take the proceeds from your sale, you go buy another $700,000 plus property, and you defer all those taxes that would have been due on that $200,000 of gain.
It's powerful stuff. I mean, that's beautiful, right? I mean, and it doesn't have to be $300,000. It can be any gain for that matter, as long as you're putting it into what's called a like kind exchange, right? That part is key, right?
Right, and like kind, it is called a like kind exchange, and that's an important concept. But understand that in the context of real estate, like kind is a very, very broad term. So it really means you can buy any type of investment real estate. So you can go from a multifamily and you can go buy, a hotel. You can sell the hotel, you can go buy a factory, sell a factory, and go buy a bunch of single family residential rentals. Those are all like kind to each other. So you have a lot of flexibility, and you can diversify and buy multiple properties as well.
Nice. So I do notice that whenever we're bidding on deals and we're trying to get our hands on these properties, 1031s often come up as a thing, right? That they don't want us to know as someone who is trying to buy an asset, for instance, that there's 1031 money involved. Maybe talk a little bit about why that is, like, and how can someone as a buyer or a seller use that to their advantage?
Yeah, sure. So, and I have not seen a lot of this, but understand, with the 1031 exchange, the deadlines are critical. So, like I said, you only have 45 days to find and identify a property, and you have up to 180 days to close. So, if you're buying from a 1031 seller, they're probably already shopping for their replacement property, and they may have pressure to close on that deal. Right. So that may give you a little bit of leverage in the process because, they need your money. They need your money to complete their exchange. On the flip side, if you're selling to a 1031 buyer, they likewise have time constraints. They have to close within 180 days. So it's, to their benefit to, work with you on whatever may be, negotiable terms. I have not seen, I hear rumors about people abusing this, sellers saying, well, I'm not going to close unless you agree to, an increase in sale price at the last minute. Have not really seen that, but there certainly is the potential to do so. And that's why you might see some of that secrecy that you're talking about, where they may tell you at the last minute that they're involved in an exchange.
That's right. No, I actually had that happen on one deal. They didn't want to increase the amount or anything else like that, but they were purposely trying to slow roll the closing past December. Into January because of I guess they had to wait till they get to the next year, right? Where we wanted to get it closer, we wanted to close it faster because we had 1031 money coming into our deal.
Right. Yeah, it's interesting. There's not really a good reason to roll it into January versus December, other than, I said you have 180 days to close, but it's really up to 180 days. You have to complete the exchange though before you file the tax return for the year in which you started it. So if they started their exchange in December of 19, they have to complete their exchange by typically April 15th for an individual to file their tax return. Or they just, it's really simple. They just put their taxes on extension and they'll get the full 180 days. So, it's just a little bit of a nuance, but it's not terribly difficult to go into the next year. Right. But, people like to get stuff, people or creatures of habit, so that December 31st date rolls around and they want all their business done for whatever reason. Yeah.
So what happens though? What happens if they're a day late? They go beyond the 180 days. Like, what happens at that point?
Yeah. Then, just the paraphrase Seinfeld, it's no soup for you. It's, you don't close in those deadlines. There's no exchange. You get your money back and you pay your taxes. Oof. Yeah. There's no extensions. I shouldn't say that. The only time they've extended those deadlines is when either the taxpayer or their property, or actually their tax advisor or CPA, is in an area that's been declared a federally declared natural disaster. So out here on the East Coast where I am, Superstorm Sandy was a big one. We had some extensions for Superstorm Sandy. On the West Coast, there's always an earthquake or a wildfire or something that, that comes up. And so there have been extensions for those as well. And we've seen blizzards and, all those other things.
Right. But there's no, like, I just file an extension like you can, like you're doing your taxes. No such thing. It's
No such thing. Right.
right. Right. So that's why when you're going out there, I mean, yes, you can flip it around, use it to your advantage, in that as a buyer, if I can tell a seller, I will close this deal by this day, it will happen. There's some credence that goes along with it. You know, they'll believe you. And if they have 1031 money in there, I think as long as they can expect and plan accordingly, they know
Right.
that you're going to pull the trigger and get it done. Right.
Yeah, I always say, you know, I tell real estate brokers and I tell sellers as well that 1031 buyers are the best buyers you can have, right? Because they have, number one, they have cash, right? Not everybody has cash, and cash is king, especially in the tight market. Number two, you know, they're motivated, because if they don't close on a deal, they're going to pay taxes, right? So now they're taking 30% out of their pocket just by not closing a deal. And lastly, they have time constraints. And so, you know, they're going to get the deal done. They're not going to spend a lot of time kicking tires and, you know, dragging a broker through 100 different properties over the course of a year. They got to get it done. And so, yeah, we like 1031 buyers, and I recommend, you know, all my broker clients that it's a good niche for them to find, to work with those investors.
Right. Now, at what point does it become too late to pursue a 1031 exchange during a buying or a selling process, or is it ever too late?
Yeah, I mean, you need to set up the exchange before you go to closing. So you need the qualified intermediary in place before you close on any property. Now, I'm going to talk typically, you know, the most common exchanges, you sell first, then you buy. You know, so what we do is we take assignment of the benefits of the contract before that. You have to enter into an exchange agreement before you go to closing. And, you know, we can do those documents really at any point up until the time that you walk away from the closing table. You know, you walk away from the closing table, it's not set up, it's too late. So, you know, we like to have a week to 2 weeks notice prior to closing to set up an exchange, but we've done plenty of those fire drills where they're at the closing table and they decide at the last minute they want to do it. You know, the people in my office who process the transactions, they probably yell and scream and throw things, but they get it done, and they get it done very quickly.
No, well, you know, it's interesting because there's other groups that takes them a while to get it all done. I mean, it might take them like weeks to get the account set up. But you guys got a handle on that, right?
Yeah, we really do. You know, it's a well-oiled machine. You know, we have a team of, I think it's about 10 to 15 people at various times, you know, do nothing but the day-to-day processing of exchanges. We have very good relationships with our banks. So they, you know, jump over and bend over backwards to get stuff done for us. We're sending wires, you know, at all hours and within reason, obviously. But, you know, we're able to really kind of get things done very quickly.
No, but that's huge though. I mean, that's a big deal. I mean, I don't want to, I'm not going to name names, but I will say that the other 1031 companies, some of them will tend to take literally weeks to set it up, then weeks to fund it, and then weeks to actually send the money in to get the deal closed. I mean, yeah, so getting that fast response is very, very important.
In this day and age, you cannot do a deal if you can't be quick, right? I mean, when I first started practicing law, you know, we would draft the contract. We would, you know, it was advanced. The old school attorneys would never overnight anything. You know, they would mail it to you. You know, you'd get the contract a week later. You know, you'd finally have the clients come in, sit down, and sign. It's not like that anymore, right? Contracts, everything's done by email. You know, funds are sent by wires. If you can't act quick, you're not going to be around. That's
right. That's right. So now, in other type deals that we talked about, like kinds exchanges, there's deals right now that I'm working on with a partner that there is a big redevelopment play here. So to buy the asset, and then we're going to redevelop this asset, right? We talked about it a little bit in the green room. So the raise on something like this is $15 million, right? But the asset is not going to be done for almost 2 years by the time it's fully occupied and all that. But we got to set up some sort of a way to get that money in. But how does someone get to use 1031 money in a case like that, or are they able to? You're
saying to invest in that deal with you mean? Yeah. So, you know, and this is kind of one of the big issues that comes up is how do we use a 1031 exchange in a syndicated deal, let's say. You know, and the typical syndicate structure is you have either an LLC or a limited partnership, and you're bringing people into the entity, right? So that's the problem. because in a 1031 exchange, you have to have the same taxpayer on each side of the equation, has to own the property. And so if they're buying into your deal and they're buying a partnership interest, essentially, that's not a like-kind purchase to the real estate that they sold. You're not able to exchange a partnership interest. So you have to do, it's a little bit cumbersome for your standard, syndicate deal, but you bring them in as a tenant in common. Okay, so they will have a deeded interest in the property. So you might have your syndicated entity, the ABC LLC will own, 95%. Maybe I wouldn't suggest you do this as a 5% investment, but let's say they had, 75%, and you're going to bring in a 25% co-investor. You got to give them a deed for a 25% interest in the property. Okay, that's typically how you structure it. It creates some stress because you cannot basically have the same syndicated agreement. So, it doesn't work very well with promotes. It doesn't work very well with, disproportionate interest and that type of thing. But there are ways around that with management agreements, and, you do that for a period of time. And then maybe in your example where you're developing it over 2 years, after it's completed, within 2 years, maybe you bring the investor into the LLC at that point.
Right.
They'll contribute their interest.
Yeah. On the refi, for instance.
Yeah.
Right?
So that makes sense. Sure.
Yeah,
That's actually a very good time to do it.
Excellent. Now, have you heard of a reverse 1031 exchange?
Yeah. And we do tons of those. So that's where you have to close on the purchase before you close on the sale. And you can do that in a 1031 exchange. The only difference is you cannot own both properties at the same time. So what we do is we, as the qualified intermediary, set up another entity called an exchange accommodation title holder, or an EAT for short, which is a horrible acronym, but EAT for short. And that EAT will be a single member limited liability company, which we will own. And that entity will buy the property and hold it until you sell your property. And then essentially you buy that property from us. The challenges are, we're not going to advance our own money. So we typically will borrow money from our clients. There'll be a promissory note documenting that. And we can do third-party financing, but, it's an entity that has no assets as the borrower. And typically the taxpayer guarantees that debt to kind of make the lender kind of a little bit more comfortable with the arrangement.
Oh, interesting. So that means then that, let's say, the same example we talked about before, there's this extra $300,000 money that they want to move, say, into this bigger deal that we just talked about, the redevelopment deal. They'd have to set up, and you guys would set up a separate LLC. He'd have to give you a loan, so he's got to have another $300K lying around.
Right, or you have to have an means to access it from a lender. We can borrow from a bank. It doesn't work very well with $300,000 because the banks are kind of mired in the CBN, collateral-backed mortgage security world. They're selling those loans, as opposed to a $20 million deal. Those banks are a lot of times keeping those deals on their books, and they're a little bit more creative.
That's right. Huh. Interesting. Okay. Well, good. That's going to be that's actually quite interesting. So now you mentioned earlier that you have to be a qualified intermediary. So is that, obviously I know that there are qualified intermediaries. When you're qualifying an intermediary, what other things what does that mean exactly when you say that? I mean, are you talking just other intermediaries are not qualified, I guess? Is that what you're implying?
It doesn't mean that at all, actually. When I first heard the term, I thought, like pretty much everybody else, that qualified meant qualified, right? That, maybe, I'm a certified exchange specialist. So I actually took a test and I got certified as an exchange specialist. That's not required to be a qualified intermediary. I thought maybe the IRS approved people. That's not the case. All qualified means is that you are not a disqualified person in the transaction. Okay, so any agent of the taxpayer cannot act as their qualified intermediary. That includes their real estate broker. That includes typically their banker. It would include their attorney, their accountant, any entity that they're the majority or more than a 10% owner of, and family members. So all those people are disqualified. That means virtually anybody else can act as a qualified intermediary in that deal. Which means you really want to do your homework, right? Because we're not well regulated. I shouldn't say not regulated. Some states will have regulations. They mostly deal with where you put the money while we hold it in the middle. But there's no qualifications or expertise required to do it. So you want to do your homework. So I'll just give you, by example, Madison Exchange, we have 3 attorneys on staff who do nothing but exchanges, myself included. We have 3 certified exchange specialists on staff. As I said, we have a staff between 10 and 15 people, depending on, any given day. And additionally, we are a large company. We are part of the Madison Commercial Real Estate Services, which has one of the largest title insurance companies in the country, Madison Title, as well as you've done some work we were talking before with Madison Specs, which is our cross-seg company. And we have a leasing, abstracting, and financial due diligence company as well. So we're a company of some sufficient assets, so that there's something standing behind the exchange. Additionally, you want to make sure whatever company you're dealing with is bonded. They should have a fidelity bond, and they should have, of course, errors and omissions insurance. And most importantly, you want to know what they do with the money. So because we do handle the money in between the sale of the relinquished property and the replacement and the purchase of the replacement property. And we are very, very conservative with that money. We put it into escrow accounts. Typically, on our larger exchanges, there's an escrow sub account bearing the taxpayer's name and tax ID number. So it's very clear that it's their money, not our money. So if anything happened to Madison Exchange, that money is kind of set aside, for the investors. The other companies in the past have done some aggressive things and they've lost people's money. So, we're very, very conservative with it.
Right. Well, I think something you said though before is that you really have to do your homework. There are plenty of intermediaries out there, and it's the ones that are going to be responsive, especially when you're in a bind, that they're going to handle whatever you're throwing at them. And that part is huge, and, like I said, there's other groups out there that, they'll do, they're qualified, to air quotes, but how fast can they get the job done when you really need it, right? That's the kicker.
Yeah, exactly. I mean, we have a dedicated company that just do exchanges. There are companies out there that do it as a side business. This is our business. Like I said, we're a separate company from our title company. Our title company is a separate company from our cross-seg company. they all stand alone and they all have expertise in what they do.
Right. So now, shifting gears here, tell me a little bit about your I guess, balancing your work life and family life. So I guess I would assume that you're spending a lot of time. I've worked with Madison for years now. You guys are hard driving. You guys do a lot of things, right?
Yeah, we do. That's the industry. That's real estate. But yeah, the balance can be tough at times. I always, first of all, I always spend time with the wife and kids. That's very important to me. My kids are older now, so they want to spend less time with me than they used to. But we always try to do stuff. But I'm an avid exercise nut. So the first thing I do most days is I go for a run. And I think when you and I saw each other in Cleveland, I had that morning I ran on the golf courses in Cleveland. And did you know they have coyotes in Cleveland? I had no idea.
No, I had no idea.
Yeah, on the golf course over there, I saw a coyote. But that kind of gives me a good start to my day. It sets my mind right. And as well as being obviously physically beneficial, it's mentally beneficial as well. Those are key.
Yeah, I think most successful people that I know, they have the same sort of habit. They work out, they exercise, and they take care of themselves. And I think that's going to be absolutely key. If you're going to have any success in life, you have to take care of yourself too. So
absolutely.
Absolutely. So, all right, guys, if you want to reach out to Michael, you can reach him at alex@madison1031.com. I hope you guys got a lot of good information about this. I certainly did. Thank you very much for your time, man. Greatly appreciate it.
Thank you for listening. We hope you enjoyed the Bulletproof Cashflow podcast.